absolutely still in a bull market. The bull market's intact from a technical standpoint, as long as it holds. I guess the number would be what, 2,800. That would be a 20% retracement, which would be a bear market, which would break the bull market. I think all eyes right now should be on silver. There's about 250 million ounces outstanding, and 250 million ounces. The world only produces 850 million ounces total production for the year. The ceasefire has already been broken. It was broken. None of it makes sense. It's like it's kabuki theater or something. None of it makes sense from the standpoint of supposedly Iran told us they're going to restrike. It's nonsensical, but it's extremely dangerous, because now you've got China and you've got Russia. Medvedev came right out and said that other nations will give Iran nuclear weapons. It's going off the rails. It tells me that the powers that be know exactly, what the outcome is going to be. There seems to be no panic, no fear. The markets are not. The only market that's acting, has had a fairly big move is the dollar, and that's been to the downside. But gold basically is where it was before this started. Silver is, and oil has retraced pretty much all of its move. And of course, equities, they seem to ignore everything.
Yeah, it's like the cocaine addict who just needs more and more dopamine. It needs another hit coming in. And the markets are just completely callous to exogenous events now. It's very interesting. You see Powell still holding steady in regards to rate hikes or rate cuts. Is he warranted in this regard? Are we about to see some massive inflation if we do see rate cuts, or is he late, as was the case 4 years ago?
Well, rate cuts on their own, it would take time for inflation to bleed through. But if the Fed were to cut rates right now, you'd probably see a dollar trading at 93, 94. And that'd be on a quarter point. If they cut further than that, you could see a bigger drop in the dollar. And the bottom line is that's where your inflation is going to come from, is the decline of the currency.
What do you make of gold's retracement back down to the $3,300 level? Are we still in a bull market for gold, or should we anticipate some of the white metals moving, i.e. silver, platinum, etc.?
Yeah, we're absolutely still in a bull market. The bull market's intact from a technical standpoint, as long as it holds. I guess the number would be what, 2,800. That would be a 20% retracement, which would be a bear market, which would break the bull market. I think all eyes right now should be on silver. There's about 250 million ounces outstanding, and 250 million ounces. The world only produces 850 million ounces total production for the year. So you're looking at what, 30% of global production may be standing for delivery 3 days from now. Like I said, 250 million ounces could stand for delivery. There's no 250 million ounces anywhere in the world to deliver.
What does that portend, though? What sort of magnitude in the price change should we anticipate seeing if things stay this way?
I've said all along that I thought silver would be the detonator to gold, and gold will literally destroy all derivatives. Once there's a failure to deliver, all derivatives are going to fail, because everything runs on confidence, and it would show that, you've got a failed contract. What's the value of a contract that cannot perform? The answer is zero. So what you're saying there is paper's worth zero, and thus what is the real thing worth? The answer is there's no telling what the number is going to be, but it's going to be, when all is said and done, many multiples of where pricing is right now.
Right. And in times like this, this is a cliche at this point, but the real catalyst behind the gold move is these central bank buyers, these institutions and so forth, not retail people like you and I.
Right.
But if that is indeed the case, and we continue seeing geopolitical risk escalate like we saw the last 12 days or so, a flight to safety is definitely going to be much needed. That's the value proposition that gold brings to the table.
Right.
Does silver bring that same value proposition, though? I mean, these banks, there's a storage issue when it comes to silver, isn't it? I mean, if you want to buy like $1 million worth of gold, I mean, you can probably hold it in your hands, really.
Right.
With silver, you're going to need like a pretty big space to store that stuff in. But so my question to you is, do institutions, banks, are they going to get into the silver game as well, in your view?
Yeah. There's no issue for institutional entities as far as storage is concerned. I mean, they can find the storage space. And you're speaking right now of the investment demand.
Mm-hmm.
And silver is different than gold. Gold is basically all investment or monetary demand. Silver's got so many different uses. Silver's got medicinal uses. It has industrial uses. It has technological uses. Every time you see a Tomahawk missile launched, there goes a monster box. I mean, there's over 500 ounces per Tomahawk missile. So silver, you've got to look at a little differently, because there's not just investment demand. That's not the primary demand. The primary demand for silver is, as I said, medicinal, technological, industrial, etc.
Yeah, and when you look at the silver to gold ratio here, you're still at this really low point,
right?
Just a little over 1% of the gold price, right? So you're literally at 1% of the gold price, just about. And when you zoom all the way out, you look at this ratio from a very long time. Let's go ahead and take out the candlesticks. Look at a line. We've only been at this level, maybe like once, twice, three times, and 4 or 5 times. Yeah, a handful of times before. So it's only a matter of time before we mean correct to the upside when it comes to silver's outperformance relative to gold.
Exactly. What you're talking about is silver will outperform gold 2-to-1 as far as purchasing power. So what I'm getting at is the risk reward of owning silver right now is hilariously in your favor.
Mm-hmm. Yeah, it certainly seems so, especially since silver, assuming that gold holds constant, you still have a dramatic upside ahead, but gold is most likely not going to hold constant, right? I mean, we should anticipate, we'd presume that there would be more upside movement left in the gold price, and therefore you'd have to see even more upside movement in the silver price to turn that ratio around.
Well, yeah, there's absolutely upside potential in the gold price. I mean, just do the math on the amount of gold that the U.S. says they have versus the amount of debt outstanding. And when I say debt outstanding, I'm just talking about on-books debt. Mm-hmm. I'm not talking about Fannie Mae, Freddie Mac, Ginnie Mae, all the loan guarantees, Medicaid, Medicare, all the guarantees. You're over $200 trillion. But if you just use the 37 trillion divided by 8,400 tons, the number you're looking at, if we had to pay our debt off in gold, we would have to price gold at about $135,000 an ounce. So there's tremendous upside to gold, but there's, in my mind, at least double the upside in silver versus gold. So, I mean, this term was coined years ago, but silver is going to be gold on steroids. If you look at the the fundamentals. If you look at what's
Right.
going on geopolitically, I mean, on any given morning, you could wake up and gold's up $100, $200, never to look back.
Mm.
I mean, if we woke up one morning and found out that a tanker or a couple tankers hit mines in the Strait of Hormuz, what's that going to do?
Right.
That will break confidence. And God forbid should we wake up one morning and find out that a aircraft carrier got sunk.
Mm-hmm.
I mean, that would be a disaster, because in the past, the dollar has always been the safe haven for foreign monies. What happened, if something happens that breaks confidence and the dollar/treasuries are no longer viewed as the safe haven, you're looking at game over USA.
Yeah.
Because,
So
and Danny, the reason it's game over USA is, what are we hearing now? That the next 4 years, the debt is going to increase by 10 trillion. That's a disaster. And what that means is we need to borrow 10 trillion just to keep the doors open.